Be Wealthy and Smart, episode 1162.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about how to defeat inflation, because recently it came to my attention that one of the biggest fears and worries and stresses that people are dealing with right now is about inflation. So this episode, we're going to talk about how to defeat inflation, how to deal with it, strategies that you can implement that will help you overcome the rising prices that we're experiencing. Now, first, I want to talk about mortgage rates because this is one of the biggest expenses that many people have. And mortgage rates just jumped back over 7% for fixed rates because inflation fears drove yields higher. When there are inflation fears that come in through economic data, it tends to boost bond yields higher, and that sets off mortgage rates higher because they loosely follow the yield on the U.S. 10-year Treasury. Now, these things can fluctuate all the time, and sometimes they're out of whack. Sometimes the fear sets off rates moving higher more than reality, and sometimes they have to readjust in the other direction. So just because rates have jumped up doesn't mean that this is a new trajectory or that they're going to continue this way. So I just want to make that point. I happen to think that because we have lagging indicators that the Fed uses, that a lot of the data actually takes some time to work its way through and to show that higher interest rates have already reduced some of the issue around inflation. And I think later this year, probably around June, that will become more apparent. But for right now, we have a fear, interest rates jumped, and here we are again. Matthew Graham, Chief Operating Officer at Mortgage News Daily, said rates continue to move at the suggestion of economic data, and the data hasn't been friendly. This is scary considering this week's data is insignificant compared to several upcoming reports. That's right, and it was last October when rates last went over 7%, and that was the highest level in over 20 years. But then they came down over the last few months as inflation appeared to be easing a little bit. By mid-January, rates were touching around 6%. So that got buyers back in signing contracts and buying homes again. And pending home sales rose an unexpectedly strong 8% from December, according to the National Association of Realtors. But the last month has been rough, and rates have moved 1% higher since the start of February. That interest rate inflation directly impacts what a new buyer will pay. And for a buyer who purchases a $400,000 home, puts down 20% and has a 30-year fixed interest rate loan, that monthly payment with principal and interest is now about $230 a month more than it would have been the prior month. And when you compare that to the year before, when rates were around 4%, that monthly payment is about 50% higher than just 1 year ago. Yes, 50% higher in 1 year. That's why mortgage applications from home buyers have been declining and recently hit a 28-year low, according to the Mortgage Bankers Association. Bob Brecksmith, president and CEO of the Mortgage Bankers Association, said the recent jump in mortgage rates has led to a retreat in purchase applications, with activity down for 3 straight weeks. After solid gains in purchase activity to begin 2023, higher rates, ongoing inflationary pressures, and economic volatility are giving some prospective buyers pause about entering the housing market. Well, of course, interest rates are the number one thing that make new buyers more sensitive and make homes either more or less affordable for them. So that is a huge factor in determining whether or not they're going to make an offer and purchase a home. So besides your mortgage, and some people don't have a mortgage, they are renting, what can you do to help defeat inflation? Well, if you are renting, something that you'll want to do is have more of an emergency fund in case your rent does increase. That way you have some money to dip into if you need to access extra funds before you've got the higher monthly payment budgeted into your expenses. Of course, you want to do some very practical things like pay down any credit card debt that you have and look at lowering your expenditures wherever you can. An easy one is to end any subscription services that you subscribe to that are charging you on a monthly basis. Maybe you're not using those services as much or they're not that important to you and it's easy for you to turn off the monthly charge. Another thing you can do is downgrade your vacation a little bit. Instead of flying to Europe, maybe you drive to a town not too far away. Maybe you drive to the next state over and you stay at a lower cost place rather than an expensive hotel. And maybe you cook some of your meals instead of eating out all the time. So you can save some money but still have a lovely vacation. You also want to plan ahead for any major purchases that you're making. If you're looking at a new car or you're looking at new appliances or a remodel, you want to make sure you're planning ahead and getting the best possible deals and prices that you can. And if you are doing a remodel, getting multiple bids to make sure that the work that you're doing is within the realm of normal costs. You also can buy food in bulk, buying bigger bags of rice or bigger bags of beans or different food items that you can bulk up on less expensively. I did a podcast about what some of the cheaper foods are during this inflationary time, such as bags of potatoes. So those are things that you can find out more about and shift your spending a little bit to save some money there. Now, the spending side, there's only so much you can do because you have generally a certain amount of income that comes in and then you have a certain amount of expenses that go out. And there's not always a whole lot of flexibility there. But where you do have flexibility is where you choose to invest. And that's why I think investing maybe 3 to 5%, a small amount, in cryptocurrency or digital assets, like the ones I've talked about on the podcast, where they have tremendous growth opportunities. That way you have a low minimum with high potential performance that could turn into a nice investment for you. I can't guarantee it, but we are in what I believe is the quantum age, where many cryptocurrencies have already outperformed the stock market, which I documented in my book, 3 Steps to Quantum Wealth, The Wealth Heiress's Guide to Financial Freedom by Investing in Cryptocurrencies. And I think we're going to see that again in this next 3-year cycle when we have cryptocurrencies perform strongly again. We haven't yet even gotten them into the mainstream, so we are so early. You can still buy them for pennies on the dollar and get a good amount for a very small investment. For example, the new Flare airdrop that we got that is allowing for smart contracts to be combined with some of our cryptocurrencies. That airdrop is going on for 36 months, and just a $100 investment could get you about 2,500 Flare tokens. From there, you're eligible to wrap and delegate and collect airdrops, which is like a free dividend in crypto, every month for the next 36 months. You also have the upside potential in case Flare starts to perform well, which I think it will since it's basically a competitor to Ethereum, which also deals with smart contracts. So that's just one example of the potential upside that you may have by investing wisely in certain cryptocurrencies. There's thousands of cryptocurrencies and they're all different, just like tech stocks are all different. So it's hard to generalize and you really need to do your research and know which ones have the most potential and why. And again, I've done a lot of that research for you in my book and on the podcast. So you have some different sources to go to narrow down your research and get your answers pretty quickly. So I think if you can handle the spending side a bit, be smart with the spending, have a little bit of extra savings, invest a little bit wisely in some high potential performing long-term assets, that's a good mix for you to be able to beat inflation. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available, so you never miss one of them. And all of my podcasts are in my wealth mentoring library that I've created for you with all kinds of wealth building topics so that you can get to financial freedom faster. They're on my website at lindapjones.com/podcasts. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.